Peter Schiff's joining us. So as the market gets all bulled up and optimistic, maybe he's here to throw some cold water on it. Mr. Schiff is the chief economist, the global strategist at Euro Pacific Asset Management. Thanks for being here this morning, Peter. Are you going to spoil the party for bulls? What's on your mind?
Well, absolutely. I mean, I don't know how they could be spinning this bad inflation report as good news. Yes, the core number was 1/10 cooler than expected, but the headline number was 1/10 hotter. In fact, if you annualize the headline number, that's 5% inflation. But even the government admits that the CPI rose 2.9% in 2024. That's not close to 2%. But if you actually look at what's happening to prices, the CRB index last year was up 24%. That hardly sounds like 2% inflation. In fact, over the past 7 months, the CRB is up about 30%. It's now trading at a 17-year high. I mean, you tell me that is somehow consistent with inflation going down to 2%. Inflation is headed much, much higher. The markets have totally got this wrong.
The not going down part seems like the easy, low-hanging fruit in that argument, Peter. The going up part seems to be the harder one. Where's the evidence that we're going to at least even get back to 22's levels? Because that's still 600 bips away for inflation.
Well, remember, nothing goes in a straight line. So we had a big explosion of prices. We had a pullback. And now we're going in the other direction. But if you look at the cause of inflation, which is money supply growth, money supply is again growing. The deficits are skyrocketing. They're going to get even bigger when we get some tax cuts. And so all of this is fueling inflation. Commodity prices are the most sensitive, and they're already reacting. I think we're in the early stages of probably the biggest commodity bull market in history. I mean, if you look at the chart, I just said we're at a 17-year high, but I think we're going to take out the 2008 high, and we're going to be soaring. I mean, look at oil prices. They're really just started to move. We're now getting closer to $80 a barrel, but I think we're going to be well over $100 a barrel early in 2025.
Wow. You think we're getting $100 a barrel of crude this year?
A lot higher.
You think we're getting $100 a barrel of crude, Peter?
Yeah, easy. We're almost at 80 now, but remember...
Well, I don't know, easy. It's been stuck under 90 for like 2 years almost.
Yeah, well, remember, one of the reasons for that was we raided the Strategic Petroleum Reserve. So we sold a lot of oil to artificially suppress the price. But we're not going to do that again. But also, there's a lot of money that's been created. There's a lot of artificial demand that's been created by central banks, and the Fed. That's going to be fueling a rise in the price of oil. But oil prices got to $140 a barrel in 2008. The only reason the CRB is not higher today than it was in 2008 is because of oil. So, we've been getting a break on cheap oil. A lot of people have wanted to blame inflation on oil. Oil is one of the few things that's still cheap, but that's about to change. Oil prices are going up, but the rest of the commodity complex is going to continue to go up. I think particularly agriculture. Food is going to get a lot more expensive.
Peter, thinking about the connection between commodities and the dollar, I think for as long as I've known you, you've been at least talking bearish on the dollar. I don't know if you've been shorting the dollar. Obviously, I know you've been buying gold, but the greenback went on a big run this past 3 months to get back almost to the highest since the Fed was jacking up rates. So all of this is the message that the U.S. still is the best house on the block. I mean, does any of this stuff break us if the money keeps finding its way back here? The rest of the world's a mess.
Yeah, I think the markets have got this wrong. It's not going to be the first time that the markets have mispriced something. I think that, yes, they're right that inflation is going to be higher than was expected, but they're wrong to conclude that that's bullish for the dollar. See, the way the markets look at it, since inflation is going to be higher, the Fed's going to have to fight harder to bring inflation back down, so rates are going to be higher for longer, and that's supposedly good for the dollar.
You think they'll have to hike this year or no, Peter? What do you think for the Fed?
Well, they should be hiking. They should be hiking right now. But the reason they're not going to do it is because the country can't afford it, because we're broke and we have so much debt thanks to how low interest rates were kept and how long they were kept there. So what I think is going to happen is that inflation is going to get much worse, but the Fed is not going to respond to it. Maybe the Fed doesn't cut, but they're not going to hike, which is what they should be doing. And so real interest rates are going to be falling, and that is going to be very bearish for the dollar. Inflation that the Fed can't fight, that the Fed surrenders to. And I also think the markets have tariffs wrong. Tariffs are not good for the dollar.
Okay.
They are going to end up being bad for the dollar. And so the markets have priced in the effect of tariffs, and they've priced in the wrong dynamic. So I think when the markets realize how much they've got this wrong, you're going to see a big drop in the dollar.
All right, so it looks like you're looking for some major reversals this year. Weakness in the dollar, crude upwards of $100. You're obviously a big gold guy, Peter. Give me a 30-second thought here. It's been stuck for a couple months. Should this be enough to break it back out?
Yeah, I think gold is going a lot higher. Again, when people realize that high inflation is good for gold, not bad for gold, and because the Fed is not going to be able to fight the inflation. That's why they prematurely stopped raising interest rates. The Fed never moved into restrictive territory. They pretend that they did, but if you look at the amount of debt that we have, that proves that interest rates were too low. The purpose of rate hikes is to slow down borrowing, but that didn't happen. Federal government borrowing hit record highs. You have credit card debt at record highs. Corporate borrowing is there. So the government never moved the needle on borrowing with their rate hikes because they never raised rates high enough. Meanwhile, we've had the most inflationary fiscal policy in history. Look at the massive deficit from 2024, the amount of money the government has spent.
Sure.
They were throwing gasoline on the inflation fire with these fiscal deficits, and that's going to continue, unfortunately, under Trump. So we have inflationary fiscal policy. We still have inflationary monetary policy. So there's no way inflation is going down. It's going much, much higher. And the peak that we had in 2021, that 9% or so, we're going to take that out either in 2025 or 2026.
All right. I knew you were going to spoil the party, but I appreciate the thoughts. As always, thank you, Peter.
All right, take care.
You too, Peter Schiff, Chief Economist, Global Strategy, Euro Pacific Asset Management.